Hey everyone, welcome back for another deep dive. Today we're going to be looking at UltraTech Cement's Q2 FY25 results.
Yeah.
And, you know, I don't know about you, but I find this stuff fascinating.
Oh, absolutely.
This is a company that's kind of like building India brick by brick, right?
Yeah, they're everywhere.
So this is a really interesting window, I think, into how the Indian economy is doing.
I completely agree. It's a bellwether
Yeah,
for the economy as a whole.
exactly. So let's kind of jump right into it. Let's talk about revenue.
Okay.
UltraTech's domestic sales volume was up 3% year over year,
Okay.
but down 15% from last quarter.
Okay.
Revenues tell a pretty similar story. We're looking at a 3% dip year over year and a 14% drop compared to last quarter.
Right.
So what's the deal? What's going on here?
So, there are a couple things happening here. Longer election cycle this year put a damper on things.
Okay.
Also, just heavy rainfall in some regions.
Interesting.
That's going to impact construction activity.
Makes sense.
Projects can be delayed, all sorts of things.
Yeah, of course.
It's just the nature of the beast.
Yeah, totally.
Yeah.
But I mean, even with those challenges,
Yeah.
they still managed to cut their domestic manufacturing cost by 4%
That's huge.
compared to last year.
Yeah, that's no small feat,
Right.
especially in this market.
Yeah, so how? How are they doing that?
Well, they're getting smart with logistics. Fuel costs were down 17%.
Wow,
Think about that.
that's huge.
That makes a huge difference.
Yeah.
Blended imported fuel, it's a game changer for them.
Wow. Okay, so their logistics are getting more efficient.
Absolutely.
Their fuel costs are down.
Streamlining everything.
So what does that mean for their gross profit?
It means that despite the dip in revenue, their gross profit is stable. And get this, their gross margin actually improved slightly year over year.
Okay, so they're getting more bang for their buck, basically.
Exactly. More efficient with each ton of cement they sell.
Love it. But it's not all about cutting costs, right?
Right.
What about things like, keeping the lights on at the plant and paying their employees?
Sure, those are real costs too. Employee and maintenance costs. Those did go up a bit.
Oh.
Salaries, regular maintenance to keep things running smoothly. But you got to spend money to make money, right?
Yeah, you got to invest in your people.
Absolutely.
Invest in your equipment.
Can't skimp on that.
Totally. So let's talk about operating income.
Okay.
How did they do there?
You know what? Even with those dips in revenue, their operating income remained healthy.
Which, again,
Yep.
speaks to their cost management.
They're demonstrating that they can keep a good portion of their revenue even after covering their operating costs.
Yeah, I mean, financial discipline's a beautiful thing.
It really is.
So let's get down to the nitty-gritty here.
Let's do it.
Net income, what's the bottom line looking like?
All right, drum roll. They reported a net income of 820 crore.
Okay, so that does sound like it's a bit of a dip from last year.
Right, and those external factors are definitely a part of it. But you also got to remember, they're playing the long game here. They're investing a lot in expansion plans. That means increased borrowing costs, constantly upgrading their capacity. All those things factor in.
So they're building for the future, even if it means, taking a bit of a hit in the short term.
You got it.
Okay, so they're like the Energizer Bunny of the cement world. But can they keep going?
That's the question, right?
Right.
We've got to talk cash flow and debt to figure that out.
Let's do it. Walk us through it.
Okay, so cash flow, this is the lifeblood of any business,
Okay.
especially one as big as UltraTech.
Yeah. So is it pumping?
Oh, yeah, it's pumping. Their operating cash flow for the first half of this fiscal year was a very healthy Genro 1,858 crore.
Okay, so they're making money.
Yeah, they're generating cash from their core operation.
That's good.
This isn't a company surviving on debt alone.
Right. But they are still taking on more debt for those expansion plans.
They are. It's ambitious. They're aiming for a 183.5 MTPA capacity by FY27.
And that's a lot of cement.
That's a lot of cement. And all that building requires cash. We're talking 4,486 crore just in the first half of this year.
Wow. So more than double their operating cash flow? Are they in over their heads?
That's the question, right? Their gross debt climbed to 13,570 crore.
As of September 2024.
Right. So you see that number and you might start to get a little concerned. But remember, debt isn't always a bad thing.
Right. Especially if you're using it to grow your business.
Exactly. The key is to look at their debt-to-equity ratio.
Okay, for the folks at home who haven't been brushing up on their financial ratios,
Yeah.
what does that tell us?
It's basically how much debt a company is using compared to how much equity it has. So if it's all debt, that's risky.
Yeah, that's a lot of risk.
But a healthy balance of debt and equity tells you they're managing things well.
Okay, so where does UltraTech fall on that spectrum?
Still pretty low, which indicates they're not overly reliant on borrowing. Plus, remember that healthy operating cash flow we talked about.
Right, right. It's a nice buffer.
Exactly.
It's a calculated risk. They're betting on India's growth.
They are. And every good gambler keeps an eye on the cards, right?
Exactly. What's their guidance look like for the rest of the year?
So they don't give precise financial projections in their report, but they do drop some hints.
Okay.
They're putting a lot of faith in the government's infrastructure plans.
Which we've talked about.
Right. And they even specifically mention these projects, PMTG and PMYU.
KMAU, is that like a new type of cement?
It stands for Pradhan Mantri Awas Yojana,
Okay.
basically the Prime Minister's housing scheme.
Okay.
There's a rural and an urban branch, and the goal is to build millions of affordable homes.
Millions. And guess what they're going to need a lot of?
Cement.
Cement.
UltraTech is setting themselves up for a home run if those plans work out.
So they're in the right place at the right time.
Oh.
But they're not the only game in town, right?
True. The cement industry is competitive.
So how do they stack up?
UltraTech is the biggest player in India. They have the largest market share thanks to their massive production capacity and their distribution network.
It's like the Coca-Cola of cement.
Pretty much.
Yeah.
But being big isn't enough. They have to be profitable too.
Right. So let's look at those key ratios.
Right. Return on equity, or ROE, is a good indicator of their ability to generate profits for shareholders. It's dipped a little since last year, but it's still healthy. Then you've got the asset turnover ratio.
Just
How efficiently they're using their assets to generate revenue. And they're doing well there, too.
so they're big, they're profitable, they're efficient.
They're a triple threat.
Right. But even the best companies face challenges. What are some of the headwinds they're facing?
Well, like we've talked about, you've got rising input costs, you've got the potential for an economic slowdown.
Yeah.
And of course, there's always competition.
It's a jungle out there.
That's why we do these deep dives, to understand the full picture.
Not just the numbers, but the context.
Exactly. These financials are a snapshot in time. The real story is how UltraTech adapts to the market.
It's like watching a master chess player.
They're always thinking a few moves ahead.
This has been fascinating. It's amazing what you can learn about a country's economy just by looking at one company.
Right.
So for the average person listening to all this, what's the key takeaway here? What does UltraTech's performance tell us about India's economy as a whole?
I think it tells us that India is still on the move.
Yeah.
There's this massive urbanization happening.
People moving to the cities.
Exactly. Creating this huge need for housing and for infrastructure.
For roads, bridges.
The whole 9 yards.
Yeah.
UltraTech is betting big on that growth continuing.
They're putting their money where their mouth is.
And all that growth needs cement.
It's true. We can't forget that.
Can't build a city out of thin air.
Nope, you need cement for that.
Yeah.
Well, this has been a really interesting look at UltraTech Cement.
It has.
I feel like I learned a lot.
Me too.
It's amazing what you can learn about a country just by looking at one company.
Absolutely.
Yeah.
Gives you a whole new perspective.
Yeah, so next time you walk by a construction site, just think about all the things we talked about today.
What the moving parts.
Oh, the financial decisions, the economic forces at play.
It's a lot more than just concrete.
It really is. Well, that's all the time we have for today's deep dive.
Thanks for having me.
Thank you so much for joining us. Until next time, keep exploring, and we'll see you on the next deep dive.